So my name is Allan Egan, and so the title of the workshop today is Navigating the Irish Tax System. But I'm going to touch on a couple of other bits and pieces as well, just how to start a business in Ireland. And it'll be kind of high level, and some people might have experience with opening a business, some people might not. And so, as I said, we're kind of high level tax, CRO, and just basics of setting up a business. We'll then have questions at the end, and some people have already submitted questions, but as well, we can have them to follow if any questions around that. So, just a brief introduction to myself and to Borgo. Borgo is a fully outsourced accounting business. So, we provide compliance, online bookkeeping, and advisory services to small and medium businesses. And so what we include in compliance would be kind of year-end financial statements, corporation tax returns, all the submissions to the revenue and to the company's office. Online bookkeeping, then we would provide a fully outsourced online bookkeeping model for some of our clients. So we do bookkeeping, accounts payable, debtors, receivable. In conjunction with that, then as well, we do management reporting and budgets and projections and things like that for our clients. So, so it's kind of a fully outsourced accounting function for small businesses. And myself, then, I'm an accountant and trained qualified back in 2008. So, where was that even now? Maybe 15 years ago. I also spent some time working in AIB and KBC in business and corporate banking for a couple of years, and then I set up my own business in some 8 years ago. So, similar position to people here, and I'm online. And I just had an idea of what I wanted to do, but I didn't have any clients. I didn't have a whole lot of capital to help me or anything like that. So it was very much a case of standing in my bedroom, going out and trying to find clients. And thankfully today now we have 10 staff working with us. We have 5 contractors, so things are going from kind of strength to strength. But I can definitely relate to the entrepreneur right there in terms of actually having an idea and wanting to run with it.
Can I ask you to speak a little bit loudly? Just people online are having.
Okay, no problem. Yeah, so that's the background to myself. That's the background to Borgo. The first thing, I suppose, before you get to revenue, before you get to the company's office, is like the people here said, we have an idea. Okay, so if you have an idea, the first thing you need to do is actually sit down and develop a business plan. So with the business plan, it doesn't have to be 30 pages. You know, a good business plan could be 2-3 pages as long as the right information is in it. You'll get lots of models online, lots of templates. And for me, a good business plan will kind of compose each of these areas. So executive summary is basically just the highlights of all of the areas below that, and what the product or service is, and how you plan on bringing it to the market, and what your price point is, how you plan on attracting customers, and SWOT analysis, so strengths, weaknesses, opportunities, threats, and then financial projections. So like a projected profit and loss, cash flow, how much funding you actually need for your business. So they're kind of the main areas that you look for within a business plan. So just to maybe give a little bit more detail on some of them, the product or service. So what you're actually going to be selling. Is it a product? Is it a service? What differentiates your idea from other ideas in the market? And market analysis then would comprise some of that kind of demographics maybe that you're looking to attract, and competitors in the market. And marketing and sales, then you would be looking at sales, your price point. You know, where are you going to be in the market? Are you going to be a premium seller? Are you going to be low cost? What your price point is? And then marketing, how are you going to get customers to your website? How are you going to get customers to your shop? Is it going to be online, offline? You know, what's your marketing plan to attract customers? And your SWOT analysis is going into a little bit more, getting really thinking about your business, the strengths of your business. Is it something that's unique? That's maybe a strong brand. And weaknesses, maybe capital, like startup businesses might be difficult to access finance, so that could be a weakness. And maybe something in your processes, you haven't quite figured it out. So, and really think about these things. And we're developing business plans or we have ideas for a business, we always focus on the positives, which is great. But you do really need to think about, well, where are my weaknesses versus what's already on the market as well. So that's just as important. The opportunities there to be there for the business, and then the threats as well. So important to really sit down and look at all those things. And the financial projections, as I said, so your cash flow, if you do have capital, how long is that cash flow actually last? Well, based on worst case scenario and best case scenario. So prepare two different scenarios, as well as a break-even analysis as well, and how much you actually need to be making on a monthly basis, just break even. If you're setting up a business, that's the absolute minimum you want is to break even. You obviously want to be making a profit. So be realistic with your projections. But it's no harm also having a stretch target in there, something that you really want to shoot for stars with as well, So that would be a business plan. If somebody was coming to us as a startup with an idea and they didn't have a business plan, that's the first thing we advise them to do is go away, sit down, develop a business plan. We would work with you and help you with financial projections if required. A lot of the things that I've mentioned above that, that has to come from the person themselves. They have to do that bit of research. So that's the first step, setting up any business. So tips, just keep it concise and focused. As I said, it doesn't have to be 30 pages. You can get all of that into 3 pages, and it should be just as good as something that's 10, 15 pages long. And review it and update the plan regularly. So a business plan should be like a reading document, just because you sat down today without a business plan doesn't mean it's not going to change in 6 months' time. So you should be reviewing it regularly, updating it regularly. We all face different challenges in business and in life, so that should all be factored into your business plan. The more information that you're getting from the business, you should be regularly updating your business plan, going back and revisiting it every 6 months or something. So that's kind of the first step. So assuming that you've done your business plan and you have a good idea and you think that there's a market for it, and the next step then for you to consider falls in, I suppose, the Irish tax system, whether you want to set up as a sole trader or a limited company. So does everyone in the room know what a sole trader or limited company is? Yeah, okay. So I'll explain briefly anyway. Like a sole trader would be, I suppose, just like myself and my side, I was a sole trader, just one person in the business, and you're operating as yourself. Limited company then would be you would set up a company, and then as you as the founder of that company will become a shareholder and probably a director of the company. So there's advantages and I suppose disadvantages to both models. For sole trader, I suppose the advantages, it's simple to set up and to wind up. Okay, so like for a sole trader, you can just apply to revenue for tax registration, and off you go, you're registered as a sole trader. It can be as simple as that. And simple to wind up as well. I suppose it's the opposite. If the business isn't going well and you don't have any creditors or liabilities, you just cancel your tax registration for revenue. It's as simple as that for a sole trader. Control. So as a sole trader, it's just you. It's on your own, so you have full control over how that business operates. And privacy. So with a sole trader, you don't have to disclose your financial statements to the CROs. They're not available for public viewing, so you do have that private element to it. And I've included lower costs here. So there's lower costs associated with compliance for a sole trader versus a limited company when it comes to accounting and things like that. So there's lower costs there with that. So the main one with the sole trader is it's simple to sell. That's why a lot of people, when they are selling a business, they just go to the sole trader route just to get something sold. The disadvantages then would be unlimited liability. So if, for instance, you mentioned restorations, and so if something was to happen with some of the work that you're potentially doing and you're operating as a sole trader, then you personally will be liable for those damages. Whereas with a limited company, the company's responsibility, and the directors and shareholders have limited liability within that. So that's an important one. That's one of the main reasons that people choose a company, is to give them that element of protection. Perception. So if you're maybe submitting a tender or you're looking for business, perception of a sole trader versus a limited company. You know, people think sole trader, they think small, they see limited company, they think kind of bigger and more credibility maybe with a limited company. It's more established versus a sole trader. So perception can be a disadvantage to a sole trader. Possibly higher taxes as well. It depends really on the level of turnover and profits within the business. I'm going to do a case study there to show you what that might look like. But there is possibly higher taxes with a sole trader, and that's after limited liability. Tax is probably the next consideration in terms of why people set up a limited company versus a sole trader. And limited growth potential. Again, with a sole trader, it can be next to possible to raise kind of finance coming in as a sole trader versus a limited company, because you can't offer shares. And so people would choose the limited company model if they're trying to look for seed investment and things like that. So on the opposite side, it's basically the disadvantages flip to advantages for limited company, and the disadvantages of the company flip to advantages for a sole trader. So the advantages of limited company, the limited liability, which I mentioned, that's a big factor. And perception again, and people who perceive a limited company to be more established and easier to work with. Possibly lower taxes, which I'll come into with the case study, and access to finance. So of those advantages and what the disadvantages are for a sole trader. And the disadvantages then for the limited company, complex setup and wind up. So it's I suppose if people have experience with it, it's not that it's overly complicated, but for people just setting up on their own, you know, there is a bit more to it than just submitting a TR1. You have to apply to the company's office, you have to apply to revenue, and you have to register with the RBO, which is the registered beneficial owners as well. So, and on the flip side then, if you're winding up a limited company, it's a lot more difficult than just submitting a tax and registration. You have to actually go through a strike-off process and things like that. So it's higher cost to set up, it's higher cost to wind down versus a sole trader. Hopefully, if you're getting into business, you know, you're not thinking of what the wind-up position will be, but certainly on the setup, there is an additional cost to it. Greater regulation, so I mentioned there, it's not just revenue that you're reporting to, it's your sole trader. All you need to do is submit your tax return on an annual basis. But with a company, you're preparing financial statements, you're submitting them to revenue for your corporation tax return, you're submitting them to the company's office for your B1 annual return, and then you also have obligations with the RBO, the registered beneficial owner. So more regulation for the company, and that's the reason for kind of the higher costs for the company from a compliance perspective versus sole trader. And the final one there is the privacy element, that you will be filing your financial statements on the company's registrations office, and they're available for public viewing. So it's limited information, it's not your full profit and loss, but there is still information available in every company that's available for public viewing. So they're the kind of advantages and disadvantages of both models. As I said, oftentimes it'll come down to the amount of tax that you're potentially going to pay in both scenarios. So I've done a case study here where the turnover for the business, if you want to call it that, is €200,000. And with the sole trader, there'll be no salary. You take what's called drawings from the business, and that's not a tax deductible expense. However, with a limited company, the director will be taking a salary. So in this case, we've estimated a salary of 100,000 euros. That would give the director then a net salary of roughly 5,000. Other expenses in the business then 25,000 for the sole trader, 30 for the limited company because of the increased compliance costs. Would give the sole trader a net profit of 175,000, and it would give the limited company then a profit of 70,000. Okay, so they're taxed differently than sole trader is taxed using the income tax. So that's income tax at two different rates. There's 20% and 40%, depending on your level of income. There's also PRSI at 4%, and there is USC at up to 8%. So potentially you're looking at up to 52% tax as a sole trader, depending on your level of income. With the limited company, your profits are taxed at 12.5%. So that's one of the main advantages of the limited company. It's that level of corporate tax, 12.5%. That's one of the reasons that a lot of businesses set up in Ireland is to pay that lower corporation tax rate. There is changes coming next year, and that headline corporation tax rate is increasing. Now it won't increase for small, medium businesses, but increase for large businesses. So it's not going to apply to people in this room. Yes, you know, to create a unicorn or something, but for the majority of us, it's not going to apply. That headline rate will remain at 12.5%. And so what I've done is just below that, then below the tax on the profits, you can see tax on the director's salary will be roughly 40,000. Net drawings for sole trader, you'll be looking at 60,000 to give an equivalent director's salary. And the cash balance retained in the sole trader business would only be 36,000, but the cash balance retained in the limited company would be 61,000. And you can see that the total tax sole trader would pay, I think, let's see the screen there, now here, would be 79,000, and the limited company would only pay 49,000.
Can I ask about limited company? Can I be an owner and a director at the same time?
Yeah. So the most common, I'm going to touch on one of the next slides, but the most common company in Ireland would be a single director, single secretary company. So you would be, in that example, you would be the 100% shareholder, and you'd be director, and you'd be taking a salary.
Yeah. And then the salary I will need to pay as I own.
So the company would be paying
100, right?
Yeah, so the company would be paying you a gross salary of 100.
Yeah.
They would deduct the tax from your salary every month.
Yeah.
Pay that over to revenue, so they would pay 40,000 over to revenue on your behalf.
Yeah.
And then you will have a net salary of 4962.
Okay. Yeah. Thank you.
So you can see, like, there is a big cash difference in terms of what the company retains in the business. Yeah. No.
And can the relatives, like husband and wife, will be the husband is owner and director is his wife?
Yeah.
Is it possible?
Yeah, you can do that. Yeah, no, that's okay. Yeah. In order to pay the person's salary, they have to be doing something for the business.
Yeah.
So, but yeah, no, you can employ your husband or your wife.
Yeah.
In the case of they could pay director's fees. Yeah, no, it's.
And what about secretary? Should you take secretary in the moment you started LTD, or?
Yeah, well, you have to. It's one director, it's one secretary. That's the minimum for every company, and it can't be the same person. So it has to be two
Cannot be.
people. It can't
So
be the same person.
even I, for example, open LTD, I'm a director, but I have to hire a secretary.
You have to hire a secretary
From the beginning.
from the beginning. Yeah.
But it shouldn't be like a full time. It can be a part time.
Oh yeah, no, like the duties of the director are different than the duties of the secretary. You know, the minimum duties really with the secretary versus the director. Which has the main stipulation is they just can't be the same person. So the secretary wouldn't have the same kind of fiduciary responsibilities that a director would have. So yeah, look, that just gives you an idea. Obviously, in this example, you know, the business is doing 200,000 turnover, which is a good level of turnover. And we would generally be kind of saying to people, if you have profits of 100,000 as a sole trader, and you don't need to take all that money out of the business, then you should be considering incorporation. So it depends, comes back to your business plan at the start, what the best model for the business is.
I have a question.
Yeah,
If you start as a sole trader and after that want to become LTD, how
Yeah.
difficult is this procedure?
yeah, no, it's not difficult. That would be very common. That's what a lot of people would do because, they start off with, a simple service maybe, and then the business grows, and they outgrow the sole trader model, and they want to switch to a limited company. And so you would be tax advice in terms of transferring the trade from the sole trader to the limited company. Assistance and setting up the company, things like that. It can be done, and it's very common. So. Yeah, so that's kind of just, as I said, a brief case study, but it gives you an idea of the difference between the two. And main headline corporation, as I mentioned, is at 12.5%. That's why it's so attractive to some businesses. So in terms of just bringing it back to the kind of the taxes and the filing obligations. For sole traders, you file your income tax return on an annual basis, and that return needs to be submitted by the 31st of October for the preceding year. So this year, for example, by the 31st of October, everybody is submitting their income tax returns for 2022. So 31st of October next year, you'll submit your return for 2023. So all sole traders have to submit what's called a Form 11, and in that then would be kind of a profit and loss of the sole trader business for the year. And in this example, so you'll be preparing a profit and loss with a turnover of 200,000, with the expenses, net profit of 175, and then you'll be calculating your tax then from that. Company directors then, so if you're a company director, every company director is also obliged to submit an income tax return to revenue basis as well. That's for what's called a proprietary director, so people who owns greater than 15% of the shareholding in the business to submit an income tax return on annual basis. If your only income is the salary that you're getting from the company, it's a straightforward return because you've already paid tax on the income through the payroll system. So it would be a simple return if it's your company. Yeah, that gets filed then by the 31st of October. There is an extended deadline for online filing, which most accountants will be doing these days. So that's an extended deadline. This year was the 15th of November, but in general, we try to cut it off at the 31st of October and use the extra 2 weeks just if anybody comes in very late to us. So that's and then for the sole trader, that's your only obligation to that return on an annual basis. Something that kind of catches people out maybe in relation to income tax for sole traders is preliminary tax. So you will, in your first year of trading, you'll calculate your income tax based on your profits, and you'll pay the tax on our profits, but you also have to pay preliminary tax for the following year as well. And that is based on 100% of the previous year's liability. So if your tax liability for the year was 10,000, you will have to pay a further 10,000, which is like an advance payment to revenue. You always make that payment. It's called preliminary tax. And then when you go to file your income tax return for next year, you have paid something on account, and that can be used against your revenue balance. So you're always paid 1 year in advance. So that's just something that can catch people out, particularly in their first year, because it can be a double payment. So if you decide to set up a company, your obligations with revenue would be corporation tax. So every 9 months after your financial year end, you have to file your corporation tax with revenue. So for companies, most companies will have a 31st of December year end. You can get any time of the year, like if you start trading in June, you might think in May year end, so only a 12-month period, but a lot of companies will try and do the calendar year. So if you have the 31st of December year end, 9 months after that year end would be September, you'll be filing your corporation tax return. And your second your revenue in relation to corporation tax is your preliminary tax return, and that gets filed in the 11th month. So again, that example, that would be in November of the year. So with income tax and corporation tax, you're always paid a year in advance. Some other considerations then as well, outside of income tax and corporation tax would be VAT. So the recent budget, they've increased the registration thresholds for VAT. And so for somebody who might know, VAT would be kind of sales tax. So it's added tax on top of whatever product or service you're selling. So the headline rates in Ireland would be 23% for most goods and services. There's a reduced rate of 13.5% for some services, such as maybe like plumber and construction-related activities, which generally attract a rate of 13.5%. And then at the moment, there is a reduced rate of 9%, which is applied more recently to kind of the tourism industry, which now that has ceased, but it is available still in the energy sector. Energy prices there at the moment, so they've introduced a 9% rate there. And so they're the rates of VAT, and so it'll depend on what level of turnover your business is doing, when or if you need to register for the VAT. And we have two rates there, so there are two thresholds there. 40,000 is the annual threshold for services. So if it looks like you're going to hit 40,000 of turnover in your business and it's a service business, you need to register for VAT and charge VAT and other services. To register, right? Extra, exactly, yeah. And so say your sales are €1,000 of sales, turn value of the invoice, you would have 23% on top of that as a service invoice. So you'd be charging 1230.
Sorry, did you say now it's like 9%, right?
That's on, there's different rates. So there's 23%, there's 13.5%, and there's 9%. And the rates, those rates apply to different services. That 9% is only available at the moment to like the energy sector. So like electricity bills and things like that should be attracting a rate of 9% at the moment. In general, the main rate is 23%. There is a reduced 13.5% services and 9%. So with that, you add the VAT to your sales invoices, customer pays you, you collect the VAT, and maybe some of the services that you're buying will have VAT on them as well, such as telephone, light and heat, accountancy, different overheads will attract whatever costs of goods sold as well, maybe, and will have VAT. So you can reclaim the VAT with your charge then as well. So once you're VAT registered, you can reclaim the VAT with your charge, and you pay over the VAT you have charged in their services. And 80,000 registration then is for goods. So there's two different thresholds. 40,000 is for services, and the 80,000 is for goods.
If it is mixed, for example, one part of my services is VAT exempt,
yeah.
One part of services is VAT.
Yeah, so it'll just work off the taxable activities. So if you're in training, I presume, or something, is it?
Yeah, and it is VAT exempt.
Yeah, so there's some services with
And
training
I
that are
will do
exempt.
something else. How I will count the dress code?
So you just pick them out. So you have your exempt activities would be one income stream, and then the other activities would be separate. So then you base it off that. So if you're doing services that were taxable, that's what you count towards 40,000.
So it's like different lines.
Exactly, different lines.
I count this part.
Yeah.
VAT exempt, and this part I pay VAT.
Exactly. Yeah. So yeah, the two different rates, the 40 and the 80, depending on whether it's services or goods. Then in terms of when you actually submit those returns, the bi-monthly is the most common. So it's every 2 months you then submit your VAT returns to revenue. And as I said, that depends on the amount of VAT that you charged, the amount of VAT that you've been charged, and the net difference is then paid over to revenue. VAT is complicated, or can be a complicated area. There's a bit to it. I think some of the questions later on maybe touch on VAT and in relation to kind of imports and exports and things like that. But at its most basic level, it's what you charge out, what you're charged, and you can go from the other to pay on to revenue. We always advise clients to set up a separate bank account when they're setting up a business and for the purposes of VAT. And it just so it doesn't get caught up in your own kind of working capital or in your own cash flow. And on a maybe monthly basis, you kind of do a rough estimate of what you think VAT that you've brought in versus what you've been charged, put that into a separate bank account so that the money is always there to pay revenue every 2 months. Because what we've seen happen in certain businesses is it just gets eaten up as part of the working capital of the business, and then when it comes to paying revenue, the business mightn't necessarily have the VAT in its current account to meet the liability. So it's a good thing for any business starting off, I think, to have a separate tax account for that purpose. So you should always have sufficient cash flow there to meet the obligations. VAT. Then PAYE is for employers. If you're lucky enough to employ employees, or if you're setting up as an independent company and you're employing yourself, then you have to pay PAYE tax on behalf of those employees. So that's every month. You submit your tax return to revenue on a monthly basis, and you tell revenue how much tax you deducted from that employee, and that gets paid out to revenue on a monthly basis. So it's the most straightforward in terms of how the information is submitted to revenue. It's an online submission, and then you can set up what's called a variable direct debit, so revenue will automatically take that amount of money from your account on a monthly basis. The complication, I suppose, with PAYE, you can just go in terms of calculating payroll. There's obviously very good payroll software out there now that can do it, or you can go to a payroll provider such as an accountant that will run payroll for your business.
Yes. Yeah, is this the situation which was mentioned earlier, that you're the director and the only person in the company?
Yeah.
So is it then a payee situation?
It is. Yeah, exactly. Yeah. So then you'd be the only person on that payroll, and you submit your PAYE return on a monthly basis, and then tax gets paid off to revenue.
And secretary.
If the secretary is taking a salary, in most cases, the secretary probably wouldn't be getting a salary from the business. Like the duties of the secretary are fairly minimal. And so
possible not to pay.
you don't have to. A lot of cases, like it's a husband, it's a wife, it's a family member.
And you can just not to pay.
Yeah, well, the company they can obviously decide if they want to, but a lot of times the company secretary then be careful in terms of how I phrase this one. They're only signing maybe a form to open a bank account at the start, and on an annual basis they're signing the B1 annual return, and they don't have much involvement in the business other than that.
So it can be just formal.
Exactly.
From the very beginning, right?
Yeah.
Yeah.
So a lot of times the company secretary won't be getting a payment for that because they don't have that much duty to the company. However, if the company obviously is growing and they're doing more for the company, then again, obviously pay as a salary. So they're kind of the main tax heads for a business: income tax for sole traders and company directors, corporation tax for companies, and VAT. So consider the registration thresholds. Some businesses, when they're starting off, again, comes back to your business plan, what kind of level of turnover you're going to do. If you're going to be hitting those thresholds straight away, you're going to have to register straight away. If you're not, and you only have a small business, you're only thinking turnover 20,000 a year, you probably don't need the extra compliance that comes with VAT registration. So the recommendation there would be to not register. Yeah, so then the returns every 2 months for VAT, and then the PAYE will come back depending on the payroll situation within the business as well. So you could be a sole trader and employ people and have payroll responsibilities as well. So and the PAYE could be for companies or could be for sole traders as well. So they're the main tax heads and filing obligations.
Alan, I don't think the mic is picking up very well.
Oh, it's not?
I can see the captions and some of them are like not big.
Let's stand closer
Yeah,
here.
I think maybe you just stand closer.
Okay, sorry, yeah.
Thanks.
Okay, so business registrations then, in terms of actually registering your business. So for sole traders, it's the form TR1, so it's tax registration with revenue. And that can be done online or it can be done as a PDF document and submitted as well. So you have two options there. The RBN1 is registration of a business name with the CRO. So if you have, say, Allan Egan, originally I was trading as Egan and Co. So that was the first business name that I registered with the CRO. And so there are two forms for a sole trader. With the company, you have a form A1, and that's the application to incorporate the company. So single director and single company secretary, that's the most common form of the company that people will be forming. You might have a company that has 2, 3, 4, 5 directors, that's okay. The absolute minimum is 1 director, 1 secretary, that can't be the same person. Must be a unique company name if you're incorporating a company. So the CRO will have a list of all the companies that are registered in Ireland. So your name that you're submitting must be unique. It can't already be used by somebody else. The TR2 form then is the tax registration with revenue for the company. So if you're registering that for corporation tax, VAT, PAYE. And the final one when you're setting up the company is the register of beneficial owners. What that is, it's basically as it says, it's a submission to notify who the beneficial owners of the company are. So that's a new legislation that was brought in recently in 2020. If you're a single director, single shareholder, 100%, then that submission would just be your 100% shareholder in the company. It's as simple as that. It can get a bit more complex where we have situations, particularly maybe in Ireland, companies are raising about a corporation tax rate and they're using different companies to hide who the actual beneficial owner is. So that's kind of one of the reasons that that legislation was brought in. A lot of people would go to their accountant or to there is companies that specialize in incorporating companies, and they would go to them to actually help them setting up the company. There is a bit more to it than the sole trader. So people would be comfortable with setting a sole trader business on their own, but would go to an accountant to help them kind of set up the company to make sure that it's done correctly. So once you've registered your business, whether it's the sole trader or the limited company, kind of next step for yourself might be just to get ROS access, so you can actually file returns with revenue if you're doing them yourself. So it's relatively kind of straightforward. The top left here you see register for ROS. You click on register for ROS. Who can apply to become a ROS customer? Any individual or entity with an Irish tax number already registered for business taxes. So once you register for taxes, you'll get your tax number. It's usually 7 pages plus a letter, so you need that. Once you get that, then you can go to revenue.ie, register for ROS. And the first step there is to apply for your RAN, your ROS access number. So once select that, once you have your tax ID number, you'll be given your ROS access number, which we send out via post. I think sometimes they might do it via email. I don't know, used to always be post. I'm not sure how they're actually doing it at the moment. Next step, once you get that, then is to apply for your digital certificates. So again, these are all fairly straightforward. Like once you have the information to hand, the digital certificate, then it's just downloaded to your laptop, your PC, and from there, then bring it back to the screen up here in the top left. You select your certificate, you set up a password, and you'll have ROS access then. So it depends on the business whether they're filing their own tax returns or whether they're employing an accountant or somebody else to file those returns on their behalf. There's no harm to have the ROS access anyway, so you can view what any liabilities the company has. Once you have access to ROS, then this is what it looks like then from from the business owner's point of view. As an agent, it's a slightly different layout for us, but for the business owner logging in, this is what it would look like. You see the options there for payroll, submit your payroll. You can view previous payroll submissions and returns, statements of account, so whether you wanted to see for PAYE, VAT, like what kind of liabilities you had, file a return, complete a form online, so that's where you file your VAT returns, your corporation tax or your income tax returns. A lot of times I'd be advising, not just because I am an accountant and we're looking for the business, but like I'd be advising you to let the kind of, to engage an accountant to kind of complete your filings for you. But some people feel they are comfortable doing it themselves, so that's where they would go to complete a form online there. And then below that, you have the options for submitting a payment and managing your bank accounts. So that would be kind of setting up your bank details for revenue. Yeah.
You just mentioned there, some people just go ahead and do it themselves.
Yeah.
Is it mandatory to get that done through an accountant?
No, not at all. No, it's not.
For both sole trader and for?
No, if you're comfortable doing it yourself, then you can submit those returns to revenue yourself.
For a limited company also?
Technically, yes. I mean, like, there's no obligation for you to engage a tax practitioner or an accountant to submit those returns.
It's difficult.
Yeah, what I would say there are like people, particularly startups, they're looking to like manage costs, manage overheads, and they'll ask that question. And I always kind of compare it to like an electrician. So if the light bulb goes, we're probably all comfortable changing the light bulb,
Because I've heard mixed opinions. Like, I know it is difficult enough in terms of, I think for the personal tax or for the company corporation filing, they said you need an accountant to sign off on the accounts.
Yeah. Technically, there is no requirement for an accountant to actually do that. 99% of companies do it. And I would always advise it. Yeah, just go back to the electrician. We can all change a light bulb. If something more serious happens, you as well have to engage a professional. So with the tax, simple things like applying for tax credits and stuff like that, it's fairly intuitive, Ross. It's a fairly straightforward process. But I mentioned VAT. There's a lot of legislation behind VAT, corporation tax and income tax. The revenue rules change on an annual basis. So if you're running a business, it's hard for you to expect to be able to stay on top of all the legislation. And that's where an accountant or a tax advisor will come in and you pay them to do that, and then they take that responsibility out of your hands. But you can do it yourself, but my advice would be to get a professional. That's Ross registration and navigation. I said the website is very good actually. It's very intuitive. It is easy enough to navigate your way around it. Okay. So that was kind of as I said, high level business plan, how to set up the business, tax registration, considerations. And we did get some questions in already, so I'll go through some of these questions and then put read back questions from the floor online. We can take them as well. Do I have any additional tax obligations if all my clients are based outside of Ireland? So the answer to that question would be yes, you do, and you have to consider whether it's business to business or whether it's business and direct to the consumer. If it's B2B and the clients are in Europe, there's no VAT charged. If it's B2C and the individual is based in the EU, then you would be charging VAT there. So there is a consideration there in terms of the type of clients that you're actually selling to, whether they're a business or an individual person.
If they not in the EU,
There's different considerations then again in terms of the VAT obligations.
it depends on the country.
Depends on the country and depends on whether they're a business or an individual.
It's connected question, not about customers, but about maybe suppliers or maybe some services which I want to order, for example, in Ukraine.
Yeah.
for example, in European Union and for example in Ukraine, are there some special, I don't know,
Yeah, so like if, I think it's one of the other questions there, but I suppose for you as a business in Ireland and you're VAT registered, if you're receiving goods or services from another business within the EU, then there's no VAT charged. And if you're receiving goods or services from outside the EU, then you have to consider possible VAT and customs and duty taxes as well. So it depends on whether the business that you're receiving the goods or services from is based inside the EU or outside the EU. There's two different considerations there.
The services and the products.
It depends. Yeah, it really depends. So it's
for example, simple example, if I pay SMM specialists and it is based in Ukraine.
yeah. And what do they do? Or what service would they offer?
I don't know anything. For example, education, and I have social media, and I pay for the person who
Yeah.
comes from Ukraine. Is it possible and how?
Oh yeah, no, it is possible.
I
If
just
you're receiving services from outside Ireland and from outside the EU, there is what's called a reverse charge, and that has to be applied to your VAT in Ireland. So again, when I mentioned VAT, it's not as simple as just taking the VAT on sale, taking the VAT on purchases. There is other considerations. But to answer your question, yeah, you can do it, but just when you're preparing your VAT return, some of those items will have to be treated differently in your tax return. If you're providing, say, an exempt service, which you might be as a coach, and you would have to apply a reverse charge on those services, and you wouldn't have any deductibility as an exempt business, so you would have to pay over what VAT that you were not charged on those services. So that's a kind of it's a little bit tricky, that one, but there's nothing to stop you receiving those services in Ireland. You just have to consider the VAT implications. And if it's goods from outside of Ireland, then you have to consider customs and duties.
always better to contact somebody who can help.
Yeah. That's all for stuff like that, just to make sure that you're treating everything correctly, you know. As I said, if it's just buying and selling goods and services in Ireland, it's very straightforward. Where you start to get into importing from outside of Ireland, outside the EU, there's nuances to your VAT, and at that stage, that a specialist will be able to advise you. Are there any tax benefits if my company is a social enterprise? So, this is your question, is it?
No, it's a good question.
Yeah. So I suppose potentially is the answer, and it depends on what the kind of purpose of the business is. So you could apply for charitable status in Ireland. You could, if it's a not-for-profit, you could apply for a corporation tax exemption with revenue as well. So it really depends, but there is potential tax benefits to the company in that it won't pay corporation tax. But other than that, it will still have obligations in terms of payroll.
In some cases, you can even won't pay corporate tax at all. Yeah, social enterprise.
In certain companies, you have to set up as a
It depends
depends on what, like, the company constitution, what the company is actually doing, what the purpose of what it was actually set up for, and then some social enterprises might apply for charitable status. It's not an area that we actually work in ourselves, I'll be honest with you. But if they apply for charitable status, then we could apply for a corporation tax exemption. You might know a little bit more about social enterprises than you.
Yeah, so I had two social enterprises, but because you don't have a legal kind of entity as a social enterprise, like you register as a limited company, for example, unless you want to be a charity, then you register as a company limited by guarantee, but then you still have to pay corporate tax the same way as a limited company. But if you apply for charity status, then you get those exemptions. But I never did it. It's a long process. It's a lot of paperwork. And also there's a lot of there's more compliance as well that you have to be aware of. So if you're thinking of going that direction, I would speak to someone like an accountant who specializes in charity. Charity work, but then they'll know.
So it's just for charity.
Yes, because you can't register just as a social enterprise. you are a social enterprise if you kind of have a pledge to be more focused on the social impact and put the money back into the company. But it's not actually a thing that you say to like the CRO or to revenue. It's just a thing that you do as part of your company.
And that's something like that would be in the company constitution.
Yes.
Saying, you know, the company, like what is the purpose of the company? Well, most of the time when you're setting up a company, you know, it's a broad range of services that that company can actually provide. And if you're setting up a social enterprise, it would be quite a narrow focus for that business, which, as Steve said, you would still be setting up as possibly as a company structure limited by the RT, and then there is increased regulation with some business that has charitable status, so it will depend on kind of what level of income and services that business is having, where it's worth the extra components. So possible tax benefits. Any tax implications if I'm importing or exporting goods from Ireland. So we just mentioned there earlier on the importing the goods, you have to consider VAT, you have to consider excise and duties. If you're exporting, then you need to consider what the status of the person that you're providing the services to, whether they're a business or an individual, and then on their side, they will have to consider the customs and duties in their own country as well.
It depends what type of products, right?
Not necessarily what type of product. Well, like the type of product would be in relation to customs and duties that apply. There's different rates to the different products. Yeah. So different rates will be applied to different products. Or the annual tax deadline, or the annual deadlines for tax returns. Something I mentioned some of these earlier, but it's the main ones: 31st of October for income tax, and 9 months after the year end for corporation tax returns. VAT every 2 months, PAYE on a monthly basis. Any tips on completing the Form 11? So my tip there would bring it back to hire an accountant, hire a tax specialist to help you with that. That would be my tip on completing the Form 11. It's probably, like, for a very simple business, it is the most straightforward of tax returns that you will be filing. So for that reason, some people, when they're a sole trader, to keep their costs down, will try and file it themselves. However, for peace of mind, for comfort, guys getting an expert to do it for you.
And it's massive.
Yeah, yeah.
Pretty long.
So if you have any other income besides the sole trader income, maybe bought and sold things, like people now at the moment, they're investing in crypto, they're investing in different things, and they might necessarily consider that when they're filing their income tax return, but all that stuff needs to be considered and included in your income tax return as well on an annual basis. So it's there's a lot to it. Are there R&D tax credits in Ireland? Yes, there are R&D tax credits in Ireland, and so you just a couple of rules around it. Around R&D, claiming R&D tax credits, you must be a company, so traders can't apply for it, and you must be trying to solve an existing a solution that's not pre-existing for this product. Again, it's not an area that we specialize in. We tend to outsource that ourselves to our tax specialists in the R&D sector, because it is quite a specialist area. So I'll be brief on that one. Yes, there is R&D tax credits available, and if somebody wants to follow up on that, I'll gladly refer them on to somebody who specializes in that area. Just wouldn't be an area of expertise for ourselves. Research and development. So, yes, yes, R&D research and development. It only applies to certain industries as well, and industries as well. Is there an income limit where I don't have to pay taxes? Yeah, there is. There's a couple of different rates. So with Universal Social Charge USC, I think it's 13,000 is the exemption limit. In PRSI as a sole trader, you don't pay any PRSI below €5,000. And for income tax, I think for a single person, you wouldn't pay any income tax below 17,500 based on to the single tax credit and your income tax credit. So there's different rates depending on USC, PRSI, and income tax. But ideally, if you're setting a business, you want to earn more than those exemption limits.
What if you're working part-time, for example, and then you're registered as a sole trader and your income as a sole trader is below that threshold, but you have other income?
Yeah.
How does that work?
So what happens with the Form 11 is it's basically takes all of your income together. So if you have PAYE income plus sole trader income, it will look at all the things together. Now you've already paid PAYE, USC, and PRSI on your payroll income. So there'll be no additional charge in relation to property of your income, but then the limits will kick in again then in relation to your sole trader income. So you're going to have to pay additional PRSI, you're going to have to pay additional USC. So
But in Form 11, it will be counted automatically or not? Always, if you fill the form.
So on the Form 11 with revenue, yes, yeah. So like once you fill in the relevant boxes within the return, revenue will calculate the tax liability for you.
And even this in such situation when you was part-time.
The threshold, yes, like that revenue.
Do everything.
Yeah, it'll calculate that for you. Yeah. So once you register for Ross, you log on, you go to file a form, go to Form 11, and you input your sole trader details, and you input your payroll details, and you calculate possible additional tax liabilities that you have to pay.
And tax credit should be.
Tax credits, there's a separate area within the return for claiming tax credits. So yeah, once you tick the relevant boxes for your tax credits, then they'll apply them as part of the return then as well. And the main credits for a single person are single person tax credit, and for sole traders and directors, it's called the earned income tax credits. They're the kind of the two main ones.
Maybe to.
Yeah. There is additional credits. Yeah, for married, there's additional credits, there's a different cut-off point, things like that you're paying higher rate of tax at. The main credits.
There are a few questions online.
Yeah.
So Anna asked regarding tax registration, can we go through the registration process online or do we have to submit the paper form?
I actually don't know off the top of my head because we do it all online. So just thinking we probably have to submit the paper return if you're getting it yourself. We have separate agent access, so we can apply online.
Yeah.
But as an individual applying, I think you're going to send in the form because you won't have cross access without actually having submitted the form in the first place. So I imagine you have to go to revenue and download that form and fill it in and send it in. Slightly different yourselves.
Yeah. Well, I had to do it a few years ago, so I would say it is still paper.
I think I sent it as well, through paper.
Did you? Yeah. So you download the form, fill it in, and send it off.
Yeah.
Then there was another question, how much does a disabled person have to earn as a freelancer to start paying taxes? So I'm not sure if this has something to do with like any welfare benefits, but I don't think it should make any difference here in terms of taxes.
Yeah,
if you know.
I have to look into that.
Yeah. But it's, I think, like if we don't take into account the disabled part, the question, it's probably what you already said in terms of how much.
Well, it'd be so social welfare payments are taxable in the majority of them, so that would be included in their income tax return. So if they're receiving some kind of social welfare payments, plus the sole trader business, the two of them are put together in the income tax returns, and the income thresholds will kick in with social welfare payments. Different supply with PRSI and with USC. So,
And can you find those thresholds online?
Yeah, yeah, of course, yeah, yeah, I could, yeah, just, I have to clarify, I don't know exactly.
Yeah.
It'd be different rates.
Great. Another question was where to read about exemptions from VAT registration. So for example, if you get a grant from Enterprise Ireland, does that count as?
But then in general, health grants wouldn't count for registration. It's not considered income, it's not considered turnover for the business, it's considered grant income, so classified separately.
Yeah.
So in general, that wouldn't factor into your VAT registration. But the revenue website is an excellent source of information, and it is fairly easy to navigate around. So to answer your question, like referring to revenue.ie, where you can put any rules in relation to VAT registration. Thanks for that question. The grant VI.
Okay. Another question. So if I started my business as a sole trader this year, so in 2023, the first time that I need to pay taxes is by 31st of October 2024.
That's correct. Yeah. And just remember, they would have preliminary corporation or preliminary tax applications as well. That's stage as well.
Yeah, and they're asking, so I think that's what they're asking. So how much? So I think, like, let's say they started in June 2023, I think they're asking up until when will I be paying for tax on the 31st of October? So
yeah, so it's 100% of the previous year's liability. So they're trading from June to December, and their tax liability for that period was €10,000. And they will pay 10,000 to pay their taxes for 1993, and they have to pay another 10,000 to cover their preliminary tax obligations for.
I don't want to ask about preliminary tax. It counts with, it's a final, you take final sum with the tax credit, with everything. And
Yeah, it's your
this
final tax liability.
final, so
Yeah,
the-
so it's after your credits,
Uh-huh.
and so it'll be your income tax, PAYE, USC, that's your credits. So
Uh-huh.
that's what the actual
minus
tax.
credits, this sum will be counted like a premium. You can take like a premium.
Exactly. Yeah, it's your net tax liability at the end of the year.
any other questions? There's nothing else online.
They come when you're starting to do something.
You don't have to be registered for that, do you?
No, that's what I'm saying, the registration threshold will be clean, so it's 40,000, so you're saying goods, and so yours 80,000 is the registration threshold, and that's an annual threshold, so if your sales are, say, 2,000 a month, 24,000 per annum, then you have no obligation to register for VAT, but if your sales were 10,000 in January, 10,000 in February, and you're projecting that level turnover for the next 12 months, then you're obliged to register for revenue as soon as you think you're going to reach that threshold. It's not a, it's not a target, it's not when you get to 80 that you register. It's if you know, it's on any 12-month basis, you're going to get that target. That's
What penalties will be if you lost this moment and registered after 18? So it's
Yeah, so revenue can come back and retrospectively apply VAT to when you should have registered. So that's the thing. They might pick a point in time when you should have registered, and then they will take that income from that period and apply VAT charge to it.
but they will take that just short period, or they can charge you all.
No, they'll pick a period of time when you should have, when they think you should have registered. So when it looked as if you were going to hit those thresholds, and probably pick that point in time and then retrospectively charge VAT. So look, something like a very simple spreadsheet, you know, and if you're like tracking your revenue on a monthly basis, which you should be doing anyway, and it looks as if you're going to hit that turnover target in any 12-month period, you should be
What will be
considering.
penalties in general, yeah, for this? So you will maybe should to pay.
But I suppose the penalty will be that you'll be charged VAT on income that you haven't actually charged VAT to the customer, you know, so like,
Yeah, so
they'll-
you punish yourself.
you'll be punishing yourself, and there could possibly be interest as well charged on it as well, so. Yeah, I think that is something just to be mindful of. Yeah.
In the limited company option, I know there's a lot of things that are more like you can show as expenses, like in terms of your, let's say your, like there's more provisions and flexibility around, you know, pensions. I understand there's more flexibility around your business expenses, like your, you want as a director, income continuance insurance.
Yeah,
Like,
Yeah.
Like, is that something that,
Yeah, that is, so I suppose, look, in the first instance, business expense has to be wholly and exclusively for the purpose of the business. Okay, so they can be applied to the sole trader or the limited company. And once it is wholly and exclusively for the purpose of the business, then it can be tax deductible. And there is, I suppose, more flexibility in terms of pension provision within a company than there is with the sole trader. And there is different types of, I suppose, policies in relation to the directors, scheme and insurance, things like that that would possibly be taken out through a company vehicle that you wouldn't have the same, you wouldn't have the same choices as in a sole trader. That's going to further down the line, I suppose, but yeah, that is something to consider as well.
If I may ask.
Yeah.
If you are a business owner and you should spend the time for your business, not to make an account job.
Yeah.
But if you want to have an account in your business, accountant.
Yeah.
How much it can cost? Like around.
If you want to hire an accountant.
Yeah, maybe a company who can.
Yes, yeah. So again, it's like everything, it depends. So.
But what I mean, if you have like not so high incomes.
Yeah.
So it makes sense, you know?
Well, look, I think some people, when they're starting out a business, they're obviously looking at their overheads, they're looking at their costs, and they try to consider whether or not it's worthwhile to hire an accountant or outsource their bookkeeping. So if they're starting out a business, our advice would always be to look, outsource what you're not good at, you know, so the bookkeeping and definitely the compliance, which again, the year comes to your accountant. But people to maintain costs or to maintain lower costs sometimes do the bookkeeping themselves in the business, and then at the end of the year they bring their books to the accountant and say, that's I've done the bookkeeping, you know, you do the end of the year tax returns. So it really depends on what you want the accountant to do for you, whether you want them to do everything, bookkeeping and compliance, or just begin your compliance at different rates depending on which level of service you want.
But like, what number of incomes should be in the company that it makes sense to have an accountant? Like, you know?
Yeah.
Like in general, I mean.
Yeah, I suppose there might be an exact.
100, 200,000 a year.
So do you mean to actually hire an accountant to work in the company, or to an accountant to actually?
I think so,
Yeah. Well, I suppose, look, if with a company, there's more regulation in sole trader, so I would be saying, yes, we hire an accountant to do those returns straight away. It doesn't matter what level of turnover is in the business, because there is a lot of compliance and regulation with a company. So really, from day one, I'd be saying, with a company, you should hire an accountant. With a sole trader, you might just get your accountant, you might be comfortable doing a sole trader income tax return, and you think you don't need an accountant, and that's fine. So I don't know if that answers your question or not. Like I'd always be advising a professional when it comes to compliance, because the penalties can be quite severe. If you miss an income tax return, it's a 5% penalty in the first 2 months, 10% after that. There can be interest charged and things like that there as well. So it's,
And if you miss some deadlines, then you miss your audit exemption.
yeah.
So then that means you have to pay a lot more for an accountant, like for an auditor to do it.
Yeah.
So that's usually the thousands there. Like, I don't know, Alan, if that's your price range, but I've paid mostly in the hundreds for like that type of service. So it's not gonna cost you like thousands when you're a really small company doing not much trading, because it doesn't take that long to do even your bookkeeping if if you're not trading a lot. And it really depends on your business. Like my business, I had kind of bigger projects, but there was just like 2 projects a year. So it was really easy to manage that. So it was always, in the hundreds that I was paying the accountant to do. So it's not,
So much, it's just for understanding.
Yeah.
like,
Yeah,
general, you know.
So like I say, you mentioned the income tax returns there, so like a sole trader, depending on the size of the sole trader, will be ranging from 600 to 1200, depending on the size of the sole trader. And then the company, they can range, the minimum would be 1200. Depends on that. The big companies and the transactions.
And as a sole trader, you said in the beginning, the opening and closing is a little bit more easier than the limited company. Should you have to close both a sole trader and a limited company if you start them?
Yeah, well, I suppose for the sole trader, the closing depends if there's creditors, people that you owe money to, we'll assume that there's nobody owed any money. And then it's just as simple as cancelling.
I'll give you a situation. If one started a sole trader company and then realized that that's the wrong setup, you actually want to open a limited company.
Yeah.
So it's just that the registration is already done with revenue. So do you need to go back now and close that and then start?
Yeah, so I think that comes back to the question that was asked earlier as well. Yeah, so like you would be transferring the trade from your sole trader business into a limited company. So there is it wouldn't be as simple as just cancelling your registration because the business has ceased. There will be other considerations there. But... Okay. That is, yeah.
thank you so much, Alan.
Okay, great. Thanks very much, guys. It was my first workshop and something like that. So, okay, you guys, yeah.
You wouldn't take it.
No?
No.
All right, okay. Yeah, I was nervous enough beforehand. So. Great, yeah. We finish online?
Yes, I'm just letting people know. Thanks everyone for joining online. If you have any questions, you should have my email address. I've been nagging you for the past few days. Thanks, everyone.